Hi everyone, and welcome to another Paddocks video tutorial. The issues that I will address in this video are: 1. Is there a requirement for the trustees or managing agent to send a levy statement to owners every month? And 2. If there is such a requirement, then what needs to be included in the levy statement? What does the legislation say in this regard? Prescribed Management Rule 31 subsection 3 states that the trustees must, within 14 days after each annual general meeting, advise each owner in writing of the amount payable by him or her in respect of the approved budget, whereupon such amount shall become payable in installments as determined by the trustees. In terms of Section 37.3 of the Sectional Titles Act, the body corporate must, on the application of an owner or mortgagee of a unit, or any other person authorized by such owner or mortgagee, certify in writing: A. The amount determined as the contribution of the owner. B. The manner in which such contribution is payable. C. The extent to which such contribution has been paid by the owner. And D. The amount of any rates and taxes paid by the body corporate in terms of Section 51 and not recovered by it. Section 51 deals with the valuation of land and buildings and recovery of rates by local authorities. Prescribed Management Rule 35 is also relevant in this regard and states that: 1. The trustees shall cause proper books of account and records to be kept so as to fairly explain the transactions and financial position of the body corporate, including: A. A record of the assets and liabilities. B. A record of all sums of money received and expended by the body corporate and the matters in respect of which such receipt and expenditure occur. C. A register of owners and of registered mortgagees of units and of all other persons having real rights in such units, insofar as written notice shall have been given to the trustees by such owners, mortgagees, or other persons, showing each case their address. And D. Individual ledger accounts in respect of each owner. Rule 2 states that on the application of any owner, registered mortgagee, or the managing agent, the trustees must make all or any of the books of account and records available for inspection by such owner, mortgagee, or the managing agent. Rule 3 states that the trustee shall cause all books of account and records to be retained for a period of 6 years after completion of the transaction, acts, or operations to which they relate, provided that the minute book shall be retained for so long as the scheme remains registered. The body corporate has different responsibilities with regard to making financial information available to members of the body corporate. As we saw, Section 37.3 requires the body corporate to certify in writing the details relating to contributions, while Prescribed Management Rule 35 only requires that the body corporate keep an individual ledger account in respect of each owner and make the books of account and records available for inspection. Nonetheless, none of the above-mentioned provisions actually require that the trustee, or where appointed the managing agent, send out monthly levy statements. Therefore, there is no provision which requires that levy statements be sent out every month. However, each body corporate may decide to act differently in this regard, depending on the size and nature of the scheme, whether the scheme is self-managed and has trustees capable of producing accurate levy statements, whether it employs a managing agent, whether that managing agent's contract includes the duty to send out these levy statements, and what owners can expect from the body corporate because of what has historically been done in this regard. In my view, the trustees or managing agent should send monthly levy statements to each owner to ensure open and transparent governance. Furthermore, the levy statement should contain separate line items for, firstly, the normal levies raised at the AGM based on the approved budget and collected on the basis of each owner's participation quota. Secondly, special levies raised by the trustees for necessary and unbudgeted expenses. 3. Exclusive use contributions collected in terms of the proviso to Section 37(1)(b) or in terms of the exclusive use rule. And finally, in terms of penalties due in terms of a valid fining rule for contravention of the Act and rules. My reasoning is that where owners are in arrears, the body corporate hands the defaulting owner over to an attorney for debt collection. In this case, the magistrate will be in a better position to establish what amounts the owner is liable to the body corporate for. I hope you enjoyed this video tutorial and will find the information very helpful. If you have any queries in this regard, please contact me at consulting@paddocks.co.za. Thanks for watching and goodbye.